I started my journey in about 2001 as an accountant. I had a momentum. I couldn't stop being active. I needed new challenges. I eventually settled with software development for biotech. It took me almost 20 years to realize that I need to do a career change. I'm an entrepreneur. I'm running two companies. One is called Optima Consulting, and the other one is Cloud Cell. I wanted to create a financial platform for funding biotech research. I would be trying to launch my own biotech thing, and the rest of the year I would be doing algorithmic trading development.
Hello and welcome to another episode of Ways to Wealth. Today I'm joined by Alexander. Alexander, why don't you give us the TLDR on who you are and what you're working on?
Okay, so I'm an entrepreneur. I'm running two companies. One is called Optima Consulting, and the other one is Cloud Cell. Optima Consulting is like my heritage that I inherited from 20 years of corporate finance consulting, mostly financial modeling, mergers and acquisitions, business valuation. But my main focus was always modeling. I mean, the more recent development is my transition to biotech. It's been a very hard journey, to be honest. I think it lasted 15 years, and I eventually settled with software development for biotech.
Right. So
I started my journey in about 2001. I started as an accountant. Then I quickly switched to an intersection between IT and financial modeling. I developed a system for processing financial records for one of the funds where I worked in Europe. And I also was studying to get my professional certification, CFA. And when I passed it in 2010, I had this, how do you call this? Like an inertia in a good way.
Epiphany?
No, inertia meaning that I had a motion, I had a momentum.
Okay.
And I couldn't stop studying, and I couldn't stop doing, I couldn't stop being active.
Right. Yeah.
So I needed new challenges, and I had a family friend who was engaged in research in biotech, and I wanted to create a financial platform for funding biotech research back in 2010. 11, 12, and, didn't work out. It's very difficult to fund any kind of research because the rewards are ephemeral. They are not, you need to persuade someone to give you money.
They have to do it for the love almost.
Yeah.
Because there's not necessarily going to be a return on the other side of the research outside of the information, right, and the learning and the discovery.
It's basically the rewards are so far down the line that the NPV of this project, like the net present value, if you approach it from that way, then it just it's very low.
Yeah, is it comparable to something like film making, where the investing in that is also quite it's for the love. The upside is not not going to get 100x on a movie. Most likely, you're probably going to make 2 or 3x.
Research,
it's even less than that.
Well, you see, there are technology readiness levels, and it's been developed. Like this terminology was developed by NASA, and there is like technology readiness level 1, 2, 3, 4, 5, and so on. And so at each stage, you value a technology based on certain criteria. Mm-hmm. Yeah. So, long story short, I started doing kind of both. So for a bit of the year, I would be trying to launch my own some kind of
biotech
thing, and the rest of the year I would be with a friend of mine doing algorithmic trading development.
Right.
And so I was kind of in both worlds. I was doing data mining essentially I ended up doing data mining in both worlds, and then I kind of in 2021, I guess, I fully switched to biotech.
Right.
I completely abandoned the idea of beating the market.
Okay.
We came close to mimicking S&P 500, but it's very difficult to launch something competing with large investment companies.
Yeah. And what was the edge you were trying to gain? What was the technique or edge that you were trying to develop?
Well, I used multi-factor model, and I used multiple machine learning algorithms. Basically, it was.
What was the composition like of the book when, like, for the trading? Was it high frequency?
No.
Was it long only? It was basically long only equities, or
it was low turnover. It was a low turnover portfolio.
So, like, quite appropriate to benchmark yourself against the S&P 500 then, because it was kind of a similar kind of vibe in terms of holdings and how you approached it, more value investing or maybe more momentum driven? We were limited by the availability of data. And the data, when you even if you buy, like if you can afford buying data, you have to deal with well, there's no perfect data. That's the reality, unless you pay a lot. And based on the budget that we had, what we bought, it was not very high frequency. I mean, it was not high frequency data. And, and then you need to have you need to have processing power to process all this data. So you were focused on quant-based strategies, and you were trying to build kind of a quant model to kind of beat the S&P 500.
We wanted to beat S&P 500. My friend is a professional portfolio manager.
So he still does that?
He's trading options.
Yeah. A lot of people have moved to options because there's a market there that's I think still it's become very popular amongst retail, which is problematic. But also, there are great things you can do with options. So that kind of makes sense that he's moved down the derivatives route.
He's been doing it for more than 20 years, so he's a professional trader.
Yeah, I mean, you've done a CFA, so you're obviously fascinated by business, and probably that was a lot of fun for you to be building that strategy. But what made the biotech win out? Was it because you didn't feel like you had that edge, or was there a little bit more enjoyment or fulfillment from the biotech side? What was the kind of?
I lost the sense of meaning.
Right.
So money for the sake of money doesn't really make sense to me.
So moving bits of paper around and making money off that is kind of, a bit more empty than trying to solve a problem in biotech.
Biotech is, I believe it's the future, especially with all the automation that's going on. And I wanted something more meaningful. And I just had, I never thought I would make a career switch.
Right.
But it just happened that way. I became fascinated with the area of machine learning. Back in 2021, I attended a lecture at the University of Auckland, and it talked about GPT-3. So it wasn't chat. So I went back home. I downloaded, installed GPT-2, and I created my own chatbot. I didn't know how to do it properly, so I just I copy-pasted its previous answers. I pinned it to my new questions and would fill it in. The context window, like basically how much data, how much tokens it could consume was limited. So the conversations were very short.
Right.
So, but it got me excited, and then I thought about the potential, and I enrolled into a program at the University of Auckland. And this year I got my degree in data science. So we'll see what will happen afterwards. But I'm working with a couple of clients in biotech, and I'm helping them apply machine learning in their field. So I'm not becoming a doctor or anything like that. So it's just probably too late for me to do any kind of thing like that.
So you're just taking the skills that you have and saying, hey, I've got this, you can use this utility I have and this knowledge I've built up in machine learning and AI and software development, and help you solve your problems in biology. Yeah, that's kind of that's
medicine, pharmaceutical development. I would say early stage pharmaceutical development.
Right, that's cool. Yeah, I mean, New Zealand has quite a rich history of deep tech, right? Like it's pretty established relative to
the few companies that are involved in biotech. Yeah, not as many as in Boston or Switzerland or San Francisco.
I guess. But on a relative basis, perhaps quite strong. Like I think about it, it feels like deep tech is comparable to tech, or like software.
A lot of people in Google, like early employees who were hired by Google, came from New Zealand. There was, I forgot the name of the school, but that was a strong hub. I mean, that is a strong hub for machine learning in New Zealand.
Right.
So there's a lot of talent here.
Yeah. Oh, cool. How long have you been in New Zealand?
Since January 2019.
Okay. Yeah. Okay. So relatively recent.
Yeah.
What do you feel about kind of where the state of tech and biotech is here versus like other areas around the world? Any lessons that you think from other places you've been that we could kind of adopt?
So anybody who's interested in this data career switch, I think the best way to go forward would be to approach mentors as you want and just get assigned a mentor. So this was my pathway. And that helped me tremendously by doing introductions. And one of the introductions is actually introduced me to my first client. So that was very helpful. When there are accelerators and the right events that one can attend. So everybody essentially knows everybody else through one person.
Yeah.
So eventually you will know everybody else. We will replace someone, replace through one other person. Like these days, I meet someone who is in biotech, for example, or has any kind of relation to biotech or even software development. And we have like 50, 60 connections in common.
Yeah, it kind of is a bit like that in New Zealand for sure. Everyone's at least second in common on LinkedIn, most likely, right?
Yes, yeah. So patience is problem where you just have to be patient and just work a year or two. It's either maybe somebody gets lucky and gets their first client or first year, but it took me almost 2 years.
But on the consulting side?
No, not on the consulting side.
Okay, that was immediate.
That was my company that developed software for biotech.
Right. Yeah. Okay.
I was building a product, so I started with a product.
Yeah.
So it's like
right.
Business 101. Well, there are ways to start a business with a product. There are many for companies that do that, but my way was not very successful. So I eventually realized that all the clients that I like, all the audiences that I approach, they need a solution rather than the product. So I did a solution on top of my product, and I eventually sold the technology.
Right. Yep. Makes sense. Interesting. What was the biggest learning from that whole experience? Was
build the client customer journey map first. And I've seen weeks online about customer journey mapping that you can listen to or read. So a customer journey mapping is basically knowing the needs of the client, having a problem large enough that is probably the most important factor.
Is that because then you don't have to rework anything you don't build before they come?
Well, I think, I haven't heard anybody say this. I think that once you have a product, you are at the mercy of somebody try to get the best possible price for them. So I built a research automation platform. It was online for 732 days. And I got basically 2 offers. And people were offering me very little. Not sufficient to bother about buying the server. Right. So eventually I just put it a flyer, But there's a lot of 2 business incubators. And I learned how to present it. So Mr. Wilson was tremendously helpful.
Have you starting your entrepreneurial journey here, or did you do some stuff before you came here in terms of the equity based?
Not an official sense. So I registered my business entities here. The code after these were just projects,
Projects and consulting gigs, and then you mentioned that you also worked at Deloitte.
I worked at Deloitte from 2004 until 2009, I believe. So I started in audit. I spent 3 years in audit. 1 year was in resources and mining, and 2 others were in financial services industry. And then I spent the rest in financial modeling and business valuation.
Yeah, and that's where you've spent quite a lot of time since, right?
Yeah, even though I isn't there, I had to burn financial models regardless, because
there are 2 ways of auditing a business. Auditing, let's say, certain aspects of a business. And sometimes
when you can't make a sample of documents, you build a model, and then you see how the performance of the business, you solve the performance is aligned with the pillars that you produce, like salaries or...
Right.
Sometimes it doesn't have to be salaries, but sometimes it could be even manufacturing side of sales. Like you look at the historical trends, then you see what the revenues were like.
Do you feel like you got a lot out of spending a lot of time doing that work, like the modeling work? Do you feel like you picked up some stuff, you learned a lot? Yeah, it's definitely an interesting space, even though a lot of forecasts are wrong in the early stage.
Financial services is a service industry, so it
has to service other industries, essentially. It does not produce the product in and of itself.
Yeah, right.
However, your maze has become like it over itself, everything does that. Yeah. And it's
more of a... it's an attitude question, like how do you approach it? But
there is a view
on financial services industry that it just produces its product for other businesses to use to produce something that consumers use eventually.
Yeah.
So I wanted to have something tangible at the end. So he built a product that people actually use, that you see, and most of what I was doing, I basically
reproduced in a pack of sheets bound together and given away to client, and I would never see what's going on.
Right.
After that.
So, kind of an observer of the business, right? Because you can direct it through your work, right, and have an influence and impact, I guess. Right, because actually when you do good work and you can help give insight and clarity to the leadership team, that does impact the business, but you are at the mercy of what's going on in the business and everything like that. You're kind of watching from the top, right? Seeing the past and then trying to work out what the future looks like.
Yeah, and there are different financial models. There are financial models for valuation.
Yeah, I guess it depends on what you're trying to do, right? Are you trying to help the business improve, or are you trying to work out what someone should pay?
Yeah. So somebody buying business or somebody selling business, you are helping business to operate
more efficiently. So that's a different kind of financial model.
Right, of course.
So that is more exciting
For me, it was more exciting for me.
And you got a bit of both.
I got a bit of both in financial modeling. For sometimes you just somebody wants to find out where they make the most
value, where they create the most value. So you build costing models. So this is like the third kind of model. I never try to classify all the kinds of financial models, but I'm sure there's a specifically fine. I haven't thought about this.
No, it's cool. I do think there's a great, you do learn a lot from, going through the CFA and then doing a lot of models. You get to see inside a lot of businesses without necessarily being in them. So although sometimes you don't get the impact, or you may feel like you're just an observer in a sense, you're understanding, seeing lots of different varied businesses, and that's the real benefit of being at somewhere like Deloitte and in those roles and those consulting roles, is you get to go and see inside behind the curtain of 20 businesses, which obviously to start and execute or operate 20 businesses is going to take too long. It's not.
Yeah, you get exposed to scale. You see how both in business-wise, so you get to visit businesses, seeing how they work. You see how the production is organized in different industries and different under different management, and at the same time, you see how to build financial model.
It's actually very sort of scalable, because if some, let's say, one of the businesses that I did a financial model call was mass media company, and we had over. To be honest, I was counted. I think it was. I remember the model had 120 pages, but
you start thinking differently.
And how does that help now that you're in the entrepreneur? Well, did you know when you were going through your career? Because you actually were in that career life for a long time, right? Like, you have a lot of experience. You've done a lot of good work.
I had a mentor early in life. He said,
no matter what you're doing to rest over your care in life, if you're wrong, you're wrong. And I realized that 20 years later. So, but once you're in, you're like on rails. This is all you can do. This is all you do. And then this is what this is what you think you are. Like, you identify with what you do.
Mm-hmm.
Yeah, sure. At least, well, in my case, that's what I thought. So I was thinking about creating an investment fund, but
it took me almost 20 years to realize that I need to do a career change.
Yeah. That's interesting and confronting. And what was the catalyst that drove you to it?
Well, there were several factors, and I think the major one was my passion for machine learning and computer science. So early in life, when I was choosing where to apply, where to study, I was enrolled. I got enrolled into two universities and two completely different majors. One was computer science. The other one was business administration. And I chose business administration because I fell in love with studying languages, and it was taught in English.
Right.
So, yeah. So, it's my computer science side was dormant all those years. And I would build several pieces of software for the phone, occasionally when I earned those.
And, I remember around Christmas time after I got my CFA diploma, I was sitting and I found this development environment for basically for developing data visualization, and I was between jobs, and I had nothing better to do than to just sit and just play with it. And so I decided to program a simple neural network. I built it. It was 2010. I built it, and then I decided to get involved in algorithmic trading based on seeing how that thing behaved. So I was very excited about that, and then that got me started
on thinking about entrepreneurship a little bit.
And so thinking about entrepreneurship, thinking about building the fund, and I my own bit of the fund was a long time idea, like very early on, probably 2001, 2002 maybe, like very, very early on.
And it's hard to jump off, right? As well.
It's really hard to jump off.
I guess, you spent a long time, you've pivoted, you've now been in, you're well in the swing of that pivot now, right? You can kind of have anything you want I don't think you can have anything you want in 5 years, but you can kind of get onto the path of what you want in 5 years, as long as you know what you want and you go and you aim for it, right? So you're well on that path now. But what does 5 years from now look like? Do you have any ideas, objectives? Have you modeled out, where you should be in 5 years from now?
I became recently, I became very cautious about making forecasts.
After how many years of making forecasts did that take? Take?
After many years of making forecasts. Well, that was done professionally, and I was forced to do it because otherwise
you were paid to.
You can't value a business
right without
most of the time.
Yeah, because you need to see what the future cash flow looks like.
With a future cash flow, you have to understand the prospects
of the industry the business is in. So
you have to have some kind of idea. You have to know what's happening in the industry.
Yeah, for sure. But I guess if someone, working in startups and being in a startup kind of ecosystem as well, we know that most forecasts end up being wrong, especially in the startup space because there's so much uncertainty. I think where the forecast has value is the thought process you took to come to the conclusion of the forecast. A good forecast should be well thought out, and you can tell whether or not the entrepreneur has really thought about it and thought about the industry, thought about the problem by the forecast.
Yeah,
even though it's inevitably going to be wrong, right? So the same is that whole path as well of aiming for something.
You have to define wrong, so there is a margin of error that is allowed, and you really have to defend your forecast in front of investors, in front of your board, whoever you're end user. So we learn to make reasonable forecasts.
Yeah. Do you think did that take you long, or is it something that you just got really good at because of the CFA? It was a good training ground.
I think it was in Deloitte where I was taught to understand how to make forecasts reasonable. But I still really found there are certain characteristics. For example, I picture request you don't make a forecast out of thin air. You go to someone who's specializing in forecasts, and then you'd say, well, according to such and such, there's a scenario that is like this. According to so and so, this scenario like that. So you end up relying on someone else's forecasts, and then we can make a professional judgment on each scenario that is made by someone else.
is more reliable. Alternatively, we can build a model of a market, and you can look at what was happening in different countries, in the same industry in different countries. Then you can say, well, the culture, that country is very similar to the culture in this country, and let's say either it's Eastern or Western, then you can say that, well, primarily based on the cultural factors, the market will develop its way. You essentially learn to find information to rely on. Mm-hmm. So there are companies that specialize in that. Yeah. And you have to make your own decisions, or not decisions, but you have to make purely your own forecasts. Yeah. Very rarely.
Yeah, right. Yeah, unless you're running a business.
You are relying on someone else's forecast or someone else's historical trends.
What do you think about operator versus an external party coming in and doing a forecast? Like, is there benefit outside of valuation, right? Valuation is more like, hey, I want to buy the business or I'm trying to sell it. I want to find a value. Whereas, let's say you're expecting, I want to do a forecast. You're going to do a forecast of my business. Would you say, as an outsider, you've got a better view, you've got a more objective, easy, better perspective, or do you think that the business owners should be more onto it?
Based on what's happening right now in the world, technologically, politically, it's, right now, I would stay away from making any forecast, to be honest, on my own, because it's very difficult to predict. So,
do you think that the velocity of change has increased?
Yeah, I actually...
by an order of magnitude?
It's interesting that you mentioned this. I wanted to actually mention one of the Moot Club equals early on in life. It was Future Shock by Elliot Software. Okay. So it basically talks about it. It was published in the 1970s. And what it discusses, it becomes a lot more the factors that influence society may be found ever more influential, right? But we do not believe it's relevant, even though it was published a long time ago. So the speed of change is increasing. However, multiple industries. So it depends on what industry you're talking about. However, this is the right way to approach this subject. So if you're talking about consumer staples, in order depends. It all depends how they analyze them.
I think software development's changing really quickly, right?
Software development's changing really quickly.
Very fast. Yeah. And it's a really interesting, but obvious in a sense that, technology or technologists would be the ones that adopt this fastest.
Yeah.
Therefore, eating themselves the fastest. Not saying that software developers are not useful or losing kind of their positioning, but being technical 3-4 years ago was much more of a greater advantage than it is today. There's just no doubt. From a commercial sense, right? Not from a first principles understanding and thinking perspective, right? No LLM's going to create new science at this stage. Or can it?
I feel really appreciative. Yeah, but I heard you're making like an answer to give current in the conversation. I want to. Yes, I will. Yeah. Yeah, I wanted to say a couple of words about the rate of change. The rate of change and technology. So in red flags, I think focus on the customer, on the end customer, is becoming ever more important. If anybody can bring you a piece of software, but you can't really sell it unless you know what the client really needs. So human aspect of the business becomes ever more important.
Yeah, I've been thinking about that a lot recently. And I guess I'm just blurting it out a few times, but I agree with that. I feel like it seems to me that a moat, right, within a business is no longer about the technology that you deliver, when I started Acuity and I started Medition, which is our holding company, you know, one of the things that we would talk about is, you know, we're a technical team that has a technical edge in a market where there is a lacking of. Now that advantage still exists because we've been adopting AI for much longer. And there is a big problem now between getting something that looks good, feels good, and seems good to deployment and scalability, right? There is a chasm there, but that chasm is only going to shrink, right, over time. Yeah, I think it's now about principles and frameworks because you can build product. Product's easy, at least in software.
Relationships with clients, developing.
And that, of course. Yes. Trust and relational. Yeah, true. Yeah, but in terms of like a product, right? Yeah. Like a software business, it's like, okay, what happens to Salesforce now?
You know the company Salesforce?
Well, in essence, right? Like, does Salesforce lose clients over time because people can deliver what they were providing?
You're literally talking about the company Salesforce.
Yeah, I'm literally.
I just spoke about it with a friend of mine like 3 hours ago.
Right. I see it as an existential threat. Here as well.
They became more I think they increased their efficiencies as far as I am aware by adopting machine learning in their workflows. So the people who stayed, they I think what I read, well, you better not quote me on this. I need to see the source. To properly refer to that. So, you know, technology changes how we operate. That's for sure. The sales function is becoming more important. And sales itself is basically my entrepreneurial journey changed my outlook on what function of sales is.
Okay. What is the function of sales?
It's the most important function for the business. So
the sale usual.
I forgot who said it, but I think it was someone in Y Combinator. So if somebody is interested, they can go to YouTube channel of Y Combinator, and there are plenty of videos discussing this particular aspect of the business.
You know, we were the first finance app in this side of the world by probably at least 6 months, maybe a year or so to implement, you know, LLMs into our product suite. And the problem is that we had bigger fish to fry, and there is no way for us to keep up with basically the progress that Perplexity and, you know, Anthropic, Claude, Gemini, ChatGPT are all making in that space from a UI perspective, right? From an interaction perspective, not to mention, obviously, we can just piggyback on their models. That's fine, right?
Like create a wrapper.
Yeah, we can create a wrapper, but then you have to be and kind of, I guess, in a sense, Perplexity is in essence a wrapper around not its own model. So, and they have some of the best results and some of the best user experience. So it does talk to that you can rely on a foundational model and still have an amazing product that solves a lot of problems. However, you know, I think that, you know, every product having like an AI chatbot in it is probably not gonna last, because it's hard, because as the foundational models and the foundational products get better, that experience is going to be so much better than the wrappers, because the companies that build the wrappers are also probably focused on a core solution or a core product that's not that, right?
We are approaching the subject of making forecasts, of, you know, forecasting.
We're forecasting.
So there's a lot of turbulence in the industry, and there's a lot of talk about circular investments and potential bubble. So I don't know.
What do you think about the revenue that's
the circularity?
Yeah. I mean, I think two things can be true at the same time, right? We can agree that AI is changing the world, changing the way the world looks. But it can also be true that the market cap of those, those top companies in the S&P 500 may be lower in a year than it is today.
I think people are very emotional about the new technology. And Gartner has its hype cycle, technology hype cycle.
Yeah.
And every technology follows this. So I think there is a lot of reason. There are many reasons for people to get excited. And some things will be automated. Probably the most boring stuff that a person can do right now can be automated. Well, it depends. Again, it all depends. And we're still figuring out what is going to be automated, what is not going to be automated. Yeah. Biotech, you will have to have a human in the loop. In machine learning, you have to have a human in the loop as well. And there is a book by Yuval Harari. What was that? Homo Deus, probably. So it talks about the future. So I think one of the forecasts that I am relying on is this by Yuval Harari, which is, to me, is just common sense. That you have to have a human in the loop in these two technologies. And that's where I'm focusing on.
Because you feel you're insulated from disruption?
I wouldn't say that.
Well, because you're interested and want to be curious and want to stay involved.
It's future-proof, a little bit.
I think that the value will be the most value by human labor will be created in these two industries.
Right. I actually think that's a pretty cool place to end. I'm fascinated to see where biotech goes over the coming 10 to 15 years with now what we have with the infrastructure that's now been built, right? Because we've just gone through a couple of years of pretty hefty infrastructure and capex spend, which has opened up the doors to basically intelligence and basically being able to run scenarios and learn at a rate that we've never seen before, and it's preceded because of the prior hype cycles. But we actually don't have the capacity to actually forecast or understand the actual change, the actual exponentiality of this change right now is going on.
And in not the least is the factor of our own emotions. And there are not biases, and these are exciting times.
Yeah. So you're saying that in the short term we're probably a bit overzealous?
I would just stick to Gartner's hype cycle graphs that they produce. So that would be probably the best way I could make a forecast. Just point my finger to Gartner.
Yeah.
Matter what they say.
Yeah. Thanks, Gartner. Cheers.